Ladies and gents, welcome to this video here. This is gonna be your full beginner's ultimate guide on dividend investing. First of all, we're gonna go over what are dividends. We're gonna be talking about why companies actually pay a dividend. We're gonna be giving you the rundown on how to choose specific dividend stocks. We're gonna be talking about the examples of strong dividend stocks. We're also gonna be going over the power of dividend investing. And not only that, but ladies and gents, I'm also gonna be hooking you up with a bunch of free stocks. Now, before I actually get into this PowerPoint presentation, if you guys are interested in picking up a copy, be sure to check out the newsletter down below in the description, and I can email you guys one there as well. All right, so to kick this video off, what are dividends? Well, basically, dividends are just payments made by a company to its shareholders from its profits or reserves. Now, the payments are typically made in cash, but can also be in the form of additional shares or other assets and are normally paid out quarterly. So normally companies do this as a way of distributing some of their profits to their shareholders. Now, shareholders are owners of the company, and once a company is listed on the public stock exchange, this is pretty much that saying you've heard where it's like, oh, I just bought like a single fractional share of Chipotle, so that makes me an owner. They're technically not wrong when they say that, and this is pretty much just a way that a company rewards individuals for deciding to invest their money into their company. Now, the reason why companies end up paying dividends is because it normally attracts investors to a company because there are individuals who solely look at companies that pay dividends as a source of regular income. Dividends is also a good sign that a company is normally financially pretty healthy and stable, and that they have confidence in being able to pay out even more future earnings. Now, not all companies pay dividends. Some may actually choose to use their profits for other purposes, where it could be reinvesting back into the business or paying off debt or even buying back more shares. But generally, we have seen a lot of these companies choosing to pay dividends because they know just how many more investors that it would attract. Now, dividend investing doesn't need to just happen within the stock market. As an example, ladies and gents, I also co-own a restaurant here in Rockville, Maryland, and I also receive a monthly or quarterly check from the owner's profits. And to me, those are pretty much like dividends too. I've gone ahead and invested my hard-earned money, and then every few months or every month, depending on when I want to get paid, I get paid a lump sum of how much the owner's profits end up being. Now, although by definition, dividends are more equated into the stock market, you can also take, for example, if you bought a certain crypto and then they airdropped where they literally just put extra crypto into your account for holding that crypto, that could be a form of a dividend payment. To back up just a little bit though, hopefully that gave you a better idea of what dividends are and how they can work universally in different markets. Sticking to what we know within stocks, let's talk about what makes a dividend stock particularly good. So this is going to be made up of 4 different factors. It's going to be 1, the dividend yield, 2, the dividend history, 3, the financial stability, and 4, the industry and the market trend. So dividend yield is pretty much just the annual dividend payment as a percentage of the stock's current market price. So as an example, to make it easy, if a stock has a 5% annual dividend yield and they're priced right now at $100 per share, you would be paid $5 annually or $1.25 quarterly per share that you own. Going into a dividend history, this pretty much just indicates the company's commitment to returning value to shareholders from what they've done with their track record of consistently paying and increasing dividends over time. Now, there are going to be some companies that have been paying out dividends for a very long time, while on the other hand, there are some companies that have just recently started to do this. In case you didn't know, but a company always has the option of pausing or opting out from paying shareholders dividends, just in the case that they need additional cash to run their business operations, or if a company is doing really well and they decide, okay, we got too much extra profit, let's give it out to our shareholders, then that is another option too. Going into financial stability, this here is crucial to its ability to see whether or not if a company would continue to pay dividends over the long term. As an investor, you always want to evaluate factors such as the debt level, the cash flow, and the profitability to ensure that the company has continued resources to sustain those dividend payments. Last but not least, what makes a dividend stock good is going to be the industry and the market trend. Now, there are some industries that are way more stable than others, and there are certain market conditions that may affect a company's ability to pay a dividend. Since dividend stocks are long-term investments, you're most likely effectively going to be able to hold these positions during bull and bear markets, finding a reliable company that will stay in business, which is going to be consistent in getting your payments into your wallets every single quarter or every month, depending on when they pay you out. Now, if you find a company that is able to have a good dividend yield, they have a good history, they have good financial stability, they're within a good industry and market trend, always make sure that you also look at the stock price. There are a lot of people who get so caught up in companies that pay the most amount of dividend for the lowest stock price that they may be at. But if a company is eventually just going to end up tanking, and in the last 2 to 3 years, they've just continuously gone down in price, the dividends you get from them is going to cancel out the profit that you may make when at a certain point, you need to actually realize the profit or loss on the certain stock that you bought. If a company is bad and they're going down in price and they might end up going bankrupt, just because they're paying you $30 in dividends for holding a share, it does not mean that it is a good investment. Now, dividend stock red flags to avoid. There are 4 more things you need to know about within this category, and it's going to be excessively high dividend yields. It's going to be history of inconsistent dividend payments. It's going to be companies heavily reliant on debt, and then companies with weak financials or declining earnings. When it comes to excessively high dividend yields, high yields may actually be unsustainable, and it could be a warning sign of underlying problems with the company. There have been historic moments where companies will provide high dividend yields to raise even more money to look more attractive, but they are just pushing out the inevitable death of that company going bankrupt. Don't fall victim or prey to those dividend yield numbers, and make sure that you are wary about what company that you are investing in and you have full knowledge of their financials. There are going to be some companies that have a history of irregular dividend payments, or that have cut or suspended dividends in the past many times. If that's the case, the track record of their past might be an indicator of how they are in the future, and you don't want to be dealing with that either. Now, companies that are heavily reliant on debt is also another huge risk of defaulting on their debt payments, which could also make it difficult for them to continue paying dividends to their shareholders. There are some companies that have an exception where if they do rely heavily on debt, but they are positioned well, where they have positive cash flow that is consistently coming in every single month, this might not matter, but for the most part, make sure you do at least take a second glance within the debt sheet for any dividend company you decide to invest in. Last but not least, companies with weak financials or declining earnings. Look, if a company's earnings are declining over time, it could show that it's just about a struggle. It might not generate enough to pay its own bills, and let alone pay the dividend to their shareholders. So just know that this could always be a huge warning that the company may have to cut or suspend its dividend payments, or their stock price just might continue to fall down. So Brian, okay, we got the good, we got the bad of dividend stocks. I got the definition. Well, can you tell me a few good dividend stocks that you know of? So I'm going to list you 3 good dividend stocks according to Warren Buffett's top performers. Warren Buffett is one of those OG individuals where he's been able to rake in billions of dollars every single year just from his dividend income. So for the first stock, we have Kraft Heinz & Co. This stock here is in the consumer food staples industry. It's not going anytime soon. If you have ever used ketchup, you'll be very familiar with this brand. And they actually had a 30.48% gross profit margin in 2022. Now, the second stock here, ABBVIE. I'm gonna call it AbbVie, which is actually just a research-based biopharmaceutical company which engages in the development and sales of pharmaceutical products. This company here is well positioned in their sector, and it's always reinvesting back into R&D, which is research and development. And according to their numbers, they have plenty of cash flow. Third stock coming from Warren Buffett's portfolio is Johnson & Johnson. You guys may have heard of this, but they engage in the research and development of manufactured and sale of products in the healthcare field. They have very strong financials, and there will always be a demand for their products in different market conditions. Now, those dividend stocks are going to be a bit more conservative, but let me show you one of my favorite dividend stocks that has actually generated me over 323% on just the stock price alone, and this is going to be Academy Sports and Outdoors. As an example, this stock here is something I bought into back in, I believe, 2020. It's one of my best performing stocks currently, and they're right now giving me a dividend yield of 0.47%. Depending on what brokerage you use, you can also enable the automatic feature where if you get a dividend, it automatically reinvests back into the company so you can continue to grow your investment portfolio. Now, if I go into my history for this stock, you'll notice that whenever I get paid a dividend, in, it'll reinvest here and it'll tell me exactly how much in dividends I'm getting paid. So I got a payment for October 13th, one in January 13th, one in April 13th. And it's nice to just get even free dollars while my position and my investment continues to grow throughout this recession. All right, so now you guys have a bit of an idea on how dividend investing works, but how much money can you actually make? And is this all even worth it? Sometimes it seems like just getting $1.60 won't compound to much, but you'd be surprised. To show you the true power of dividend investing on a long-term scale of about 25 to 30 years, let's go ahead and pick just two of the stocks that we mentioned from Warren Buffett's list to do some future projections. So ladies and gents, to do this, I went ahead and found the average stock price appreciation from the previous 10 years and also the average dividend growth of the last 10 years and used those numbers to project the 25 and 30 year investing rate for dividend growth. We're going to be using the factor of an annual contribution of $1,000, so $1,000 per year, and an initial investment of just purchasing a simple 10 shares. So when it comes to ticker symbol ABBV with an annual yield growth from the past 10 years of 1.81% to 3.68%, the average growth of dividend payments is going to be 0.155% per year in the last 10 years, which is going to be $40 to $161 in the past 10 years. Now, fast forward over 25 years, by reinvesting those dividends, you would have an end balance of $6,845,209.39 with a total dividend income of $762,463. Now, by not reinvesting those dividends, you would have an end balance of $3,628,744 or a total dividend income of just $453,258. Now, over 30 years of $1,000 annual contributions, by reinvesting your dividends, your end balance would be $29,686,000 with a total dividend income of $3,338,000 versus not reinvesting those dividends, you would have an end balance of $13,612 versus only just $1,722,000. So what this shows us is just by reinvesting those dividends, you would net an additional $309,000 over 25 years of investing. From just an additional 5 years, your dividend income would be increased to over $2.5 million. So ladies and gents, I know for that example, it could be a bit of an anomaly just because of the rapid increase in the stock price for the past 10 years for ticker symbol ABBV. So let's use Johnson & Johnson as another example of how much the power of dividend investing could yield you. So with J&J, we have an annual yield growth from the past 10 years of 2.8% to 2.79%. In the past 10 years, they've gone from $67 to $161 with a total ROI of 140%, which comes out to be about 14% annually. So over the next 25 years of just investing $1,000 annually and reinvesting those dividends, your end balance would be $360,000 or a total dividend income of $55,480. By not reinvesting those dividends, you would have an end balance of $224,000 or just $39,431. So here we're going to learn a few things. By also taking a look at the 30-year rate of $1,000 annual contribution, you would have an annual balance of way more. It would compound significantly. It would almost double for an end balance of nearly $790,000 versus an end balance of $438,000 if you do not reinvest those dividends. So a few things that we can learn. Compound interest is real. It takes a bit of time. 25 to 30 years is nothing to just cap out about because that's a long time from now. But the money that you decide to invest now with those dividends, you're playing a long-term future plan. 25 years could result in just $224,000, where if you held it in and then kept those dividends in for another 5 years, you'd be seeing that money double. Now, at this point in the video, ladies and gents, I want to make sure that you guys get hooked up with those free stocks, and here's how you can do it. Go to the link down below in the description, click on it. It's going to open up a tab called Moomoo. Look, I know they don't have the coolest name in the world, but they're going to give you some free stocks.
Moomoo just came out with some breaking news to let you guys know that they'll be offering 20 free stocks for the month of May. So if you want 20 full free stocks, be sure to check out the links down below in the description.
All right, so what I'm going to do is click on sign up. and then I'm gonna go ahead and create a new account with an email. From here, you choose the country of tax residence that you live in. I'm sure most of you guys are from the US, but if you're not, you can go into other. And from here, you put in your basic information. After you do that, you click next, and then you're required to put in your social security number. Don't get freaked out by this part right here. Any type of brokerage or financial platform that you're using generally requires your social security number, not because they want it, but because it's just required by law. So I went ahead, put my social security number in there, and then I'm also gonna put in the address that I live in. Once I do that, I went ahead and put in my full address. You put in a little bit of information just about your employment status. Let's say I'm unemployed right now, salary. I make about $50,000 per year. I don't have a big net worth. So once you do that, you wanna go ahead and verify a phone number. So once you do that, you want to then deposit the required amount into the app. Once you do that, you'll also have the qualification for those free stocks, get them into your account, redeem them, and then from there you can do whatever you please. So Moomoo is going to be your all-in-one trading platform that not only allows you to buy and sell stocks, but they also have some pretty dope analysis tools and up to 2,500 free investing courses and many other beginner to advanced level friendly features. So if you want to enjoy commission-free trading with all the fantastic features that I mentioned, ladies and gents, check out Moomoo down below in the description. Thank you to Moomoo for sponsoring this small portion of the video. All right, so ladies and gents, before we wrap up this video, we have 5 powerful dividend investing quotes and tips to motivate you guys and to have some takeaways before leaving y'all on your journey. To start out with number 1, the most important quality for an investor is temperament, not intellect. So do not be trading off of emotions, and dividend investing really follows that because it allows you to play that long-term game. He also mentioned someone is sitting in the shade today because someone planted a tree a long time ago. This year is just really talking about the fruits of the labor of someone who decided to invest a long time ago, where their future generation can reap those benefits and those rewards. A lot of people can't depend to get wealthy just overnight, but it's always good to play the long, steady route because over time, that tree will grow and that shade that someone has of comfort will be over them because of what you've done. He also mentions number 3, be fearful when others are greedy and be greedy when others are fearful. I'm sure you guys have heard of this quote many, many times, but it is true, especially throughout this recession, where if you see people getting greedy all of a sudden, be a little worried. Or if you see people all just afraid, no one wants to invest, then consider maybe this is a time for you to start averaging back into the market. Peter Lynch stated, behind every stock is a company, find out what it's doing. So this pretty much just shows us every company out here listed on the stock market exchange, they're doing something. They are not just pixels on a screen. They are not just words on your phone that you're reading, but these are real companies with real people that are trying to make an impact to whatever market that they're in. Last but not least, with Warren Buffett, once again, he states, unless you can watch your stock holding decline by 50% without becoming panic stricken, you should not be in the stock market. So this quote here is just a reminder that no matter what happens within the stock market, be careful about those emotions. And if you're someone who thinks you're going to freak out, sell it at the first chance you get, this might not be the path for you. Now, guys, I also have some resources at the end of this. It's going to be a stock research tool, a dividend calendar, and a financial education Investopedia link. If you guys want to have access to further tools and research, or you guys want to just see this PowerPoint for yourself, be sure to check out the link down below in the description. Thank you all so much again for watching today's video. Have an amazing, blessed day, and I'll see y'all soon. Peace out.